Very good evening, friends, and welcome to all of you in today's session. First of all, wish you very happy New Year to all of you. Uh, my name is Bharat Kacharia. I'm Zonal Manager in NJ Wealth, looking Andhra Pradesh, Telangana, and Tamil Nadu. And today we have chosen a very interesting topic to discuss with all of you. And the topic is wealth building in golden era of India. And to present that presentation and discuss in this topic, we have excellent speaker from the mutual fund industry. I think there is no need to give the introduction, but I'll give the introduction to ma'am also. The name of the speaker today, you all know very well, Ms. Radhika Gupta, MD and CEO from Edelweiss Asset Management Limited. So I'll give brief details about the, ma'am, and then we'll start the session. So Ms. Radhika Gupta is an investment professional with the range of diverse experience across the asset management globally and in India, which include the startup and the global giants, public and private sector, and institutional and retail clients. She started her career with McKinsey, later switched to the Wall Street, joining AQR Capital, pioneer in hedge funds. She then moved to India in 2009 to start with her own venture, Forefront Capital Management, the first registered hedge fund in India, which was acquired by the Edelweiss Financial Services Limited in 2014. She led Edelweiss acquisition of JP Morgan's mutual fund business and Ambit Capital AIF business to become the CEO of Edelweiss Asset Management in 2017. Since then, her efforts are concentrated in helping the building brand Edelweiss Asset Management into fastest growing, differentiated in innovative asset managers. The recent launch of the Bharat Bond ETF in entrepreneurship with the government of India, India's first corporate bond ETF, is yet another step in that direction. Ms. Radhika Gupta is a global citizen uh, having uh, across the four countries, citizenship across the four countries, a keep storyteller, a bridge player, and Twitter microblogger. Her YouTube video, "The Girl with a Broken Neck," which narrated her life journey, has uh, uh, gained more than 100k views in a short span of time. Ms. Radhika Gupta has graduated from the Management and Technology program from the University of Pennsylvania, with joining a joint degree in economics from the Western School of, in addition to the computer science engineering from the More School, and is the founding president of the Penal Alumni Club of Mumbai. She is a member of the MP board of chairing the Committee of Mutual Fund Distributor and member of Young President Organization. She was recently honored by the Business Today magazine, naming her among the top 30 most powerful women in Indian business. And with that introduction, I would like to invite a ma'am for the today discussion and very interesting topic, wealth building in golden era of India. Over to you, ma'am. Welcome to you and over to you, ma'am. Thank you.
So, hello everyone, and it's a pleasure. Thank you for the introduction, and it is always my pleasure to talk to investors of NJ. To be frank, आप लोग now you started feeling like family. हम लोग through various sessions, physical and digital, we have got the opportunity to interact. तो मुझे बहुत अच्छा लगता है. I always enjoy talking to all of you. Please give me a minute as I do share my screen. And if someone on the NJ team can just indicate that my screen is visible, can someone confirm that my screen is visible?
Yes, ma'am, your screen is visible.
Okay, wonderful. So let's get started. And as I said, always a pleasure to speak to this group. Now, interesting सी बात ये है that if you look at the title of this presentation, it says stock tip for the decade. And you also read a thing saying Edelweiss Mutual Fund, which is the company that I represent. And you must be wondering, why is someone with a mutual fund background running a presentation on stock tip for the decade? Well, today it seems to be a little bit of a bull market, and everywhere I go, people are asking me about a stock tip for the decade. And hopefully you are curious by now, but I hope to give you a stock tip for the decade over the next 30 minutes. Now, before I start doing that, I want you, and even if you are not uh, someone who follows the stock market very closely, I think you will be able to relate to this story. And I want to tell you the story of a specific stock. And if you know the stock, then you can start guessing it in your head. Putting it in the chat window if there's one, whatever it is. You can just start thinking. But this is a very interesting stock. It's one of India's oldest companies. It's a company where the products are extremely popular. The management is extremely good. We know the company. It's a homegrown brand, and we want good things to happen. But for many years, this stock did not perform. In fact, this stock, which was a large stock, remained stagnant and stable for so many years that people started getting frustrated with this stock. कि इसका कुछ हो क्यों नहीं रहा है, ये shift क्यों नहीं हो रहा है? And as I later show you, memes started getting created on the stock, because it was not like the student who didn't study in class and failed. It was a good student in class where good things should have happened, but somehow things were not moving. And if you can't guess what stock it is, I'll give you another clue. A few years ago, something broke out and the stock started moving, and it's moved and moved. And by now, let me tell you what stock this is. This is actually the story of ITC. So between Jan 2014 and effectively July 2021, ITC really did not move. In fact, it hung out so much in the period in the zone of around 200 to 250 that memes were created. And the reason I have started this presentation with this story of ITC is India's story in some way historically has mirrored ITC's story. A great country, a democracy where the people are good, people are hardworking, Indians are engineers to the world, healthcare workers to the world, CEOs. But yet, India was not getting its due. It wasn't moving at the pace at which we think India deserved to move. And in the last few years, like ITC, things have changed. As I was promising you, memes were made on ITC. Now, if you remember um, this is a meme from the movie Three Idiots. And in the movie Three Idiots, there is an interview board interviewing Sharman Joshi, who plays Raju in the movie. And they ask him, "Aapka patience level kitna hai? How patient are you?" And Sharman Joshi replies, "I'm an investor in ITC." And of course, the interview board says, "Right answer, you got the job. Salary kitni loge?" This was ITC in the waiting period. Of course, later there was a second meme that came out on the right where Chatur, who talks to Rancho, which is played by Amir Khan, and said, "Kaha tha na, ek din tum roge aur main hasunga. One day you will cry and I will laugh." And in 2023, it really felt like India was having a bit of the last laugh. So this is a little bit of how I think about India. Now, before we talk a little bit about the next decade and all these things, I also think it's important to go back into India's history a little bit and just pause for a second and think about ये जो date मैंने आपके सामने डाली है, August 28th, 1608. What happened in India on this date? And if you don't have an answer as an Indian, I would ask you to remember this date. This was a date when the gentleman called William Hawkins, the British gentleman, came to the Indian city of Surat seeking some permissions for the East India Company. And of course, many things happened after that: the East India Company, the subsequent colonization, the plundering of the national capital. All of these things happened. But incidentally, before 1608, India was actually a very rich country, and this is not something many people know. So, till the 1600s, in fact, till the 1700s, when really the plunder of India happened, my father told me this story. India actually was producing 25% of the world's manufacturing. And I went to him and I said, Papa, how is this possible? 25% of the world's manufacturing came from India? And he said, what was the dominant business in terms of manufacturing in the world then? It was textile. And India was a world leader in textile. In fact, many of the English words like shawl, cashmere, pantaloon, and dangari have origins in Hindustani languages. Of course, then came 1739, and in 1739, a modeler called Nadir Shah plundered Delhi. And effectively, what it took India 200 years to accumulate in terms of wealth, back then about 10 billion pounds of goods, gold, silver, stone, the peacock throne was looted back to Iran on, as you can see it, 12,000 horses, 700 elephants, and 4,000 camels. After that, India eventually achieved independence. And on achieving independence, let me ask you another question that may force you to think. What was the first problem that India had at the turn of independence? Well, we were a country with a large population. We were a country जहाँ population literate नहीं थी, and we were a poor country जहाँ खाने की food was a basic problem. So in 1947, our biggest challenge was actually to figure out food. And 1965 का जो green revolution है, that was the first major success of India. Now, one of the decisions we took in the 60s and 70s was also that India would be built on a mixed economy where private sector and public sector would coexist. Unfortunately for us, growth remained only 3% during this period. The first set of reforms in India started happening in the 80s and continued into the 90s. And the 90s reforms were far more structural. And that's when you started to see growth really pick up. And of course, 2023, India is a very different place today. Now, before I go back to my stock tip of the decade, let me tell you another story and ask you another question. Um, some of you, and you'll be attending this from many parts of the country, would recall that in Mumbai and Delhi, Apple opened its first retail outlets. The first Apple stores were opened in India. Now, this happened recently. This happened in 2023. Let me ask you a question. When did Apple open its first store in China? The answer is 2008. Interestingly, Apple took 15 years after it opened its first store in China to open a store in India. Of course, the Chinese economy grew multifold since 2008. Today, India's per capita GDP is about 2,700 US dollars. Per capita GDP हमारे 2700 डॉलर है. Do you know what China's per capita GDP when the Apple store was opened was? It was also $2,700. There are also many similarities between the India and China of that period. Both benefited from a young population, what we call demographic dividend. When you have a large young population that really supports consumption and workforce, both benefited from an export boom. Both had a very low labor cost. In fact, in that time, the China we know, people used to say that China is a place where सस्ता सामान मिलता है, and it was actually because labor cost was very, very low. So let's come back to my stock tip, because all of you must be wondering, Radhika has come to give a stock tip and she bored us with some Indian history. So let me ask you a question before I give you some stock tips. What do you see in a stock before investing? If I was in a live audience, these are some of the things you would say. You would say, I look at the market size. Is it playing in a big market? I look at how penetrated the product is. There's no point buying a stock of a company which has 95% penetration. I would look at the margins and cost structure because, of course, I want the stock to make money. And I would look at profit growth because I want profits and I want profits to grow. I would look at the balance sheet of the company. I would like to look at the debt levels. I would look at if the company has any right to win in its market or is it just one more player. And of course, I would look at the management in a company. So now let's go to my stock tip and analyze it. Today, India actually has a huge target market. Now, very often when we see India, we read about a country of $2,700 per capita. But actually, we don't live a life of $2,700 per capita. You would recall in India, hotel rates have gone through the roof. Whether you are in Udaipur or whether you are in Chennai or whether you are in Kolkata, you could have hotels of 30, 40,000 rupees a night. Uh, Builders are building luxury properties in the range of 15 to 20 crores and they are filing sales. Harley Davidson just launched its series of premium bikes in India, and even those get sold. And what I want to tell you when I talk about large and diverse customer base is India is actually not one country, but three different Indias. The first India is what you see on the screen here, which is rich India. It's the top 12 crore out of 140 crore people that account for half of India's economy. And this India is actually a rich country. Its GDP per capita is like China. It is investing, it is consuming, it is spending. The second is aspiring India, which is the next 10 crore people who account for $300 billion of GDP. They're opening their first bank account, buying their first scooter, maybe becoming affordable housing customers. And the third is this large mass of growing India, which is the rest of the economy, 120 crore people. What is very interesting is each of these three is a very large market. So India has a large customer base. The other interesting thing is that if you just look at rich India, and all of us here on this call effectively represent rich India is going to double in the next 6, 7 years. So we are living in a country with a large and diverse customer base. The other wonderful thing is, and many of us don't appreciate these things because we live in rich India, is that today product penetration in India is low. You live in a large market, but the penetration of even basic products and even financial products is very low. Now, you think and I think that everybody has a fridge, a TV, an AC, a car. Let me ask you to guess in 1,000 Indians, how many Indians do you think have a car? 3%. Look at the numbers as I go through these slides in China and Thailand. How many Indian households have an air conditioner? And we are, for the large part, a hot country. 10% of households have air conditioning. This number is more than 50% in many parts of the world. Less than 1 in 5 households have washing machines, a basic product like a washing machine. In most parts of the world, manual washing is finished and only 1 in 2 households still has a TV. Look at the numbers in the rest of the world. So we are a large market. The market opportunity is large, but penetration is low. The third, we talked about advantage. Now, I have a son, and let me tell you a quick story before I go on. My parents are extremely indulgent grandparents, and they keep complaining to me that I don't buy enough toys for my son. And one day in frustration, I told them that when I was small, जब मैं छोटी थी तो आपने मेरे लिए ऐसे क्या toys लिए थे? And my father told me that there was this particular toy that he got from Germany when we lived in the US. And there were three penguins that would climb a set of steps and come down a slide. And he got it from Germany. And he said, "You please get this for my grandson. पैसे मैं दूंगा. I'll pay the money." I said, "Okay." And he said, "You go to the US and you get it." Because I was planning to travel to the US. Now, the next day in frustration, I decided to type this toy on the internet. And I said, "Hey, heck yeah, cheese. Let me find out what this is." I figured out that this product was now available for 400 rupees from three websites in India. We used to be a country which represented 25% of the world's manufacturing. But by the late 80s, you could not get a decent hair dryer, a toaster, or toys. But we are coming back to having an advantage in manufacturing. And the primary reason we will have an advantage in manufacturing is that if you look at labor cost, on manufacturing wages in India today, they are cheaper than the rest of the world. In China, actually, manufacturing wages are $1,400 a month. China is no longer the place of low cost labor. In India, they are 10% of that number. So, manufacturing cost will give us a huge advantage. Just one second. The second is, and I don't know, if this point will be covered, but I do want to talk. If you look at Saudi Arabia today, it is one of the largest oil exporters in the world. Last year, Saudi Arabia exported about $170 billion of crude oil. Did you know that in the same year, India exported $190 billion of IT services? We export today the largest number of healthcare workers in the world. We are engineers to the world. And if you look at Microsoft, Google, Starbucks, and Chanel, what is common is that they have an Indian CEO. So, manufacturing is an advantage, but services is also a big advantage. When you look at a company, you often look at its balance sheet. And one of the things you want in a company is that debt levels are low so that there is room for leverage. If you look at India, we actually were a country that handled COVID uniquely. Most countries found their way out of COVID by spending a lot of money. The government spent a lot of money, households took a lot of debt. That is not the case with India. Debt levels are extremely low. The fifth, it's become very common to talk about mid caps and small caps and micro caps these days. Let me talk about a perspective of India, as a mid cap, as a small cap, as a micro cap. Just give me a second. I am having a machine crash. Yes. Just give me a second. I think I'm having a machine crashing. Can you guys still see my screen?
No, ma'am,
And
we can't see your screen. It is
just give me
closed
a
now.
give me a second. My machine is suddenly crashing midway. Is there a way to stop screen sharing?
Screen is already stopped.
It's not stopped
Uh,
on my end.
yeah, but it is not visible to us currently.
Give me a second. Nothing is visible to you?
Means your screen, your face, that is visible, but your presentation is not visible.
Okay, my presentation is visible to me. Let me try again.
Again, present.
Okay, let me try again. I'm so sorry about this. Let me turn off video maybe and try and share the screen. Is my screen visible now?
Yeah, now screen is visible. Change it to full
Okay,
screen.
perfect. I think it was just a minor keyboard related issue. Just a sec, I'm trying to get the screen to work. Give me a second. Screen is visible?
Yes, presentation is visible. Perfect.
Okay, perfect. So, yes, sorry about that. So, I talked about India's journey as a mid cap, a small cap, and a micro cap. And I want to show you the trajectory of India from being irrelevant to where it is. So, if you look at the 2000s, these are all the countries in the world ranked by economic size. And if you look at the top 10 economies in the world, India was not present. This is India's existence as a nano cap. In the next decade, India broke through the list of small caps of economies and we made it to the top 10 economies in the world. In the next decade, we moved one more rung down the segment, and today we are among the top 5 economies in the world. In the next decade, I think India will genuinely become a large cap. And next year, we should cross 4 trillion in economic size. Or this year, we should cross 4 trillion in economic size. And by the end of 2030, we will grow to become one of the will grow to become the third largest economy in the world. Now, if you look at the story of USA, if you look at even the story of China, on a relative basis, India's growth is the fastest among its peers. Sixth, a lot of people discuss management in the context of India, and I think this is a very interesting discussion. And with an election year coming, people often ask, what is the impact of management on India? And I'm not a very political person, so I don't want to give you a political answer, but I want to give you a logical answer. India has had a, and this government, by the way, has done a great job. So let me give my political disclaimer here. But India has had multiple governments in power. But one of the things that has held this country well is that whether it is UPA or NDA, there has been policy consistency. If you look at a policy like GST, it was started under UPA government, continued by NDA government. Aadhaar, started by UPA government, continued by NDA government. And I think continuity of policy and reform is extremely important. Both governments here, incidentally, have led the country reasonably well through crisis. 2008 global financial crisis, 1991 balance of payments crisis, and of course everything that happened with COVID in 2020. So on the whole, we have an election system that works. Managements come, managements go. Both managements have shown an ability to handle crisis, and regardless of which management has been in power, a certain amount of continuity of policy and reforms is critical, and that is exactly what you want to see in a stock. I already talked about this, but I think it's worth highlighting here that if you look at India, I used to joke that in India, if you want to get your wisdom tooth extracted, it probably can be done in 5,000 rupees. In the US, when I got my wisdom teeth extracted, I think the year was 2020, the year was 2006. I paid $13,000. Today, India has the most cost effective medical treatments in the world. India today, you can do a hair transplant for 1 to 2 lakh rupees. In the US and Canada, it's about 5 times the cost. In fact, my parents live in a city called Gurgaon, and Medanta Hospital, which is based in Gurgaon, exists for the purpose of medical tourism. I already talked about the size of our IT market and the fact that so many CEOs of global companies are Indian. Now, when you look at a stock, it's very important to look at the balance sheet of the stock and how the stock is doing. And, I grew up for a large part of my life in the US. And some of you would be surprised to know that in the last 20 years, about 500 banks, 560 banks have actually failed in the US. Our rail minister, Ashwini Vaishnav, was doing a session and he talked about the growth of the last few years. And he said one silent thing that has enabled the economic growth that you're seeing recently is the fact that after 2013, when India had a banking crisis, we worked on cleaning up the banking infrastructure. Today, when the world's banks are in the worst of shape, when you're seeing something like a Credit Suisse, which is a major bank, fail, your banks are actually in some of the best of shape. And the banking system is the foundation and the fulcrum on which any economy functions. So today, NPAs at our banks are low. Government balance sheet is in very good shape. Corporate balance sheet is in very good shape. So the balance sheet of India is actually outstanding. Now, when you look at a stock, one of the things that you also like to look at is earnings growth and how the growth of underlying businesses is shaping up. And if you look at a company and you see that only one division is growing or driving growth, generally it's a cause for concern. You want growth in your stocks, in your companies to be broad based so that you build a resilient business. Now, if you look at India, and I don't know if anyone has seen the Hindi movie Karan Arjun, but in the last decade, Earnings growth was a little bit like Karan Arjun, where the mother kept saying, "Ek din earnings growth aayegi." One day earnings growth will come, but it never truly came. That has changed with this decade, and you are seeing consistent double-digit earnings growth. So if you look at this slide here, what you will see is the last decade, earnings growth will come, earnings growth will come, and then you just have these patchy years where you have not seen earnings growth. Cut to this decade, and earnings growth is happening. One of the other problems of the last decade was that growth was very specific to a few stocks and sectors. So, tech contributed to the economy, FMCG contributed to the economy. Today, whether it is tech, financial services, or even the manufacturing side of the economy, India is fighting on multiple legs. And finally, and many of you will not admit this, when most of us look at stocks, we like to look at recent performance of the stocks. You call it momentum or you call it anything else, we like to look at recent performance. And our team did some analysis at Edelweiss Mutual Fund and said, if you look at the stocks that have come, if you look at different countries, which has produced the highest number of multi-baggers? A multi-bagger here is a stock that has done 10 times returns in any 5 year period. And there's no surprises for guessing that India topped that list. 54% of NSE 500 stocks have generated more than 10 times returns since 2000, beating other countries by a margin. And the great thing about this whole story that I told you, the great thing about the India story is it's not a single sector economy. When I look at a country like Saudi, when I look at a country like Zambia, these are single sector economies. Brazil is dependent on commodities. Zambia is dependent on copper. Some countries are dependent on tourism. I didn't talk for very long, but I can tell you a story in many sectors: healthcare, banking, employment, manufacturing, space, even tech, consumption, housing, formalization, capital markets. There are so many stories to tell about India. And in a sense, the economy is robust, it's multi sectoral. The other thing that has been bothering me is that this question I get about mid caps and small caps, um, and the fact that has the capital market got enough space to absorb all this money that is coming? Now, let me ask you a question again. Just think about it. What do you think the average market cap of a large cap company was 25 years ago? It was 3,000 crores. What do you think the average market cap of a small cap company is today? It's 12,000 crores. And look at this. Look at how India's market has evolved. Today, there are almost 1,000 companies with greater than 2,000 crore market cap. So opportunities have expanded. Historically, what you used to call a small company, a mid cap company, a small cap company, a small cap now is $1.5 billion. A mid cap is $5 to $6 billion in size. So the India opportunity, in my view, is not only multi-sectoral, but also multi-cap. Finally, I would summarize by saying that for all the thought that I said, that I would give you a stock tip, it is my firm belief that the greatest stock tip for the next decade is India itself. There can be no better stock tip. Um, if you look at all the parameters that we look at to analyze a stock, whether it is size of market, whether it is growth, whether it is past performance, whether it is management, whether it is balance sheet, India scores high on all parameters. So the greatest stock tip of the decade is truly India itself. I also want to leave you with three particular tips to play India, because every stock has a unique way to make money out of it. The first is, I truly believe that it is important to invest in simple products. As India expands, you will see a slew of complex products come to the market. And it is really important to focus on simple products and invest in simple products. The second point I want to make is that throughout this journey, I painted a great picture of India. But in all this, there will be drama. There will be years like 2023 where you make a lot of money, but there will be years that are difficult and they are painful. And there will be years when you will lose 20% of your portfolio. Volatility and drama in India is inevitable. And we are extremely dramatic people. We are dramatic about our cricket team, and we are dramatic about our movies, and we are dramatic about our stock market. So volatility is inevitable. And the third thing that's very important is patience. A lot of time is thought about timing the market, timing the market, timing the market. When should I enter the market? We had a fund that was launched in 2007, November, and it's a pretty bad time to launch a fund. But even that fund, and it is Edelweiss Mid Cap Fund, the NFO investor has earned more than 14% plus. So, time in the market and patience with India is more important than when to invest. And if you look at these 3 points, simple products, inevitable volatility, and the power of patience, what you spell is something called SIP. And I really think the best way to make money from the stock called India is to play India by investing regularly into India. Do an SIP into India. It will help you mitigate the volatility. And over 10 years, an SIP investor we've seen in the worst of times always comes out a winner. The last thing I want to share with you is a perspective of India from a different point of view. I started with Indian history and I talked about India like a stock. But now I want to talk about India from another point of view that is very personal. And I want to talk about India through the lens of film, because I truly believe that any society's reality is best reflected in its cinema. Now, in the 1916s, and I have used Hindi movies because that's the space I understand the best. In the 1960s, there was a movie called Mother India that was released where we showed a money lender as an unfortunate and evil kind of character who was exploiting people. Thankfully, today we don't call people who lend money like banks and NBFCs evil. In the 1970s, India worshipped an angry young man. A smuggler was actually a positive character, and the angry young man represented post independence India that was also angry. And in the 1980s, Yash Chopra produced a movie called Kala Patthar, which showed that a coal mine and a company was exploiting people. It was the evil corporate of the 1980s. If Arnab Goswami had to talk about the mood of the nation, this was the mood of the nation. In the 1990s, India had liberalization, and a slew of foreign products started coming to market. In some way, what was foreign was desirable. You had Rasna produced in Gujarat, but you wanted Tang from America. You had Vada Pav, which is a staple of Maharashtra, but your burger from McDonald's attracted lines. And in the north of India, where I come from, many girls chose to marry NRIs because going abroad was desirable. And many of our films started being set in London or Switzerland or Paris or Australia because what was Western was amazing. Now in 2000, something started changing. And the same production house, Yashraj Films, that took you to Switzerland, started making movies based in the heartland of India. And when asked what changed, they said this: the economy had changed. By mid 2000s, MNCs had started coming to India, a bull market had happened, job opportunities started creating, the IT boom had happened, and Indians started realizing that we don't need to go abroad to be successful. We can succeed while being in India. Bunty and Bubbly is a movie that highlights small town aspirations. Band Baja Barat is another movie that highlights young entrepreneurship. And many such movies are made today. They are set in, movies don't need to be set in Switzerland. They can be set in Agra or Madurai or Kolkata or Ahmedabad and be equally successful. And incidentally, in the early 90s, we were obsessed with winning an Oscar in India, and we used to produce these crossover films that we thought would appeal to the NRI. Today, we can produce a film like RRR for an Indian audience, and yet a song like Natu Natu, which is very much an Indian song, can go win an Oscar on a foreign stage. And finally, I think this is the mood of the nation today, which is Gully Boy. No matter where I have started from, I'm not angry, I'm aspirational. I want to succeed. Success is something I want. And I'm going to leave you with two lines. I can't sing, so I'll just leave you with the lines. One of the 1960s and one of present. In the 1960s, Mother India had a song, and I'll also translate it, where the lyrics said, दुनिया में अगर हम आए हैं तो जीना ही पड़ेगा, ये जीवन अगर जहर है तो पीना ही पड़ेगा. If I have come into the world, I have no choice but to live, and if the life given to me is poison, I have no choice but to drink it. This is what we said in the 60s. कौन कहता है in 2019 कि मुझसे ना हो पाएगा, एक दिन अपना टाइम आएगा? Who says it cannot be done? One day my day will also come. I think this change from दुनिया में अगर हम आए हैं एंड जीवन जहर है, तो कौन कहता है मुझसे ना हो पाएगा, अपना टाइम आएगा, is the change that India has seen. And with that, I'm going to stop right here and I can take any questions. I'm going to start my camera now so that you guys can see me.
Such a wonderful session, ma'am. Started from tips, and you have given a wonderful tips, which is investment is in India, with all the parameter you have covered, why we need to invest in India. So I can check the questions. So my request, first of all the participants, if you have any question, you can type in the chat box. We are very happy to take the question from all of you. Till investor will ask the question, I will ask few questions behalf of investor. Generally, that common question is coming in the investor's mind nowadays. So whenever the Indian equity is doing very well, and historical return is good, and the investor are making good returns, so some of the investor have a question in his mind during this type of situation, even though they have invested for a goal oriented or longer period of time, and they are investing in mutual funds. So and the question is coming is that let's we can do the profit booking, and let's we can redeem some money because market is high and whenever the opportunity is coming. So how it is relevant when you are investing in mutual fund and a goal oriented investor,
So
and
I
when
think
after you are showing this kind of opportunity and tips?
firstly, you know, people always ask this question on profit booking, and I always ask this question, profit book karke karoge kya? What will you do after profit booking? And in doing this profit booking, you take away from the premise of investing, which is compounding. The real magic about India and about investing is to let your money do its work and sit still. Now, does that mean you should never not book profits? Of course not. See, the critical word in everything you said is goals. And if we start orienting our investing more to goals, तो मैंने equity की एक SIP शुरू की, and I have a 5-year goal that I want to work towards. My goal is realized, maybe that's the time to book profits. So rather than thinking ad hocly on when I should book profits, it's very important to work with your partner or advisor and think through your goals, and that will guide you. Because the point is, if you book profits, where will you put the money? And
Correct.
most people don't have an answer to that question.
Correct. Right, ma'am. The second, the confusion is coming. Lots of investor, the India. If you look at the investor are increasing the day by day in a mutual fund. So sometime first time investor, they are investing in the mutual fund portfolio, and they are diversifying his portfolio through 4 5 SIPs, and every time all the SIPs cannot generating the equal return. So sometimes what is happening, the 3 4 scheme is doing very well and 1 or 2 scheme is not up to the mark, and they're coming and asking the question, can we let's we can change these two schemes, they are not up to the mark. So can you guide something for our investor about this? How can they manage the SIP so they can get better return over a period of time?
This is a great question, I think. Thank you for asking. One is you have to realize that no matter how hard you or your advisor work, you cannot predict which will be the best performing fund. And it is not a horse race. As long as you are invested in funds that over the long term are beating the benchmark, are in the top half of their peer set, to be honest, you have done a very, very good job. Even me, as a fund professional that sees 45 AMCs, I don't have the ability to tell you in the next year this AMC will do well. And often, what we do is, an AMC is doing well, we say, Acha, isme dalna hai. An AMC is doing badly, we say, isse nikalna hai. And performance also, everyone's performance is not always top of the charts, everyone's is not bottom of the charts. So that is also cyclical. And in doing this, actually, what we end up doing is paying a lot of long term capital gains tax. So, once the two suggestions, when you build a portfolio, think about diversification sensibly. Like buying 5 schemes of one AMC is not diversification. But if you have bought 4 or 5 schemes of different investment styles, then some of them should not be performing at the time when some others are performing. Otherwise, you have not done any diversification. And once you have done that
Correct.
diversification, please have the courage to stick to it. If after 5 years you find that your scheme is at the bottom, has not beaten the benchmark, then you should raise a flag.
Correct. Correct. One more, the question is coming in the investor mind. I'm just asking behalf of investor only, and there is a common question coming in the investor's mind. And some some type of that types of question is coming on the meeting only, and we are keep continuously giving that answer. Okay, in the rising market or when the market is in upsided movement, yeah, historical performance is good, some of the investor is thinking like that, okay, we can stop the SIP during this time, and whenever the market will come, we can restart our SIP. So actually, when you are looking for the 15-20 year history today,
Yeah.
2008 the peak was the today's bottom, something like that. So that types of sometime the question is coming in the mind. So can you say something about that on that question, ma'am?
So my point on this question is, one, it is very difficult to time markets. Timing markets is an extremely difficult thing to do. Timing SIPs is an even more difficult thing to do. Now, the benefit of SIPs is that it's not only a returns tool, it's also a tool to think about saving. And this thing that I have a 20,000 rupee salary and 2,000 rupees every month is being deducted for an SIP is a very, very powerful habit. It's very easy to say, by timing your SIPs, I think you lose the point of SIPs itself.
Correct. So in a SIP, today is the better than tomorrow, and don't try to timing in the equity market.
And it's a
Correct. Whether it
savings
is
habit as much as it is an investment return too.
correct, ma'am. And lots of new investor came in the recent past, the last couple of years, and they have made the good return from the Indian equity investment. So uh, but the his investment is not up to the mark in equity as an asset class, and they are interested to increase his asset allocation towards the equity. So how you can you suggest, ma'am, how in the current scenario, how they can increase the equity allocation in during this time, which way they will increase, it would be better for them for over a period of time?
See, this is a difficult question because Ismay, your NJ partner is going to be the best person to honestly help you. Because the equity answer for everyone is very individual and very specific. Now, I am personally a very conservative investor. You may be a very aggressive investor. SIP, by the way, is a great way of staggering and increasing your equity investment over time. So you can start with a very small SIP amount, but gradually you will realize your equity portfolio is growing. The other thing that you can do is you can start with, sorry about that, just 1 second.
No problem.
You can start, sorry, that's, I have a 1 year old son and he's screaming in the background. You can start your equity investment in a hybrid fund. So you start your equity investment if you are less comfortable in a fund like a BAF, or an aggressive hybrid with its 60-70% equities. And then as you get more comfortable, you can switch from that BAF kind of fund to a full-fledged equity fund.
Right, ma'am. So the one question is coming, lots of the nowadays, so many investors are doing the investment in a stock, and they are doing the investment in a mutual fund too. So one of the confusion is coming in a mind. Matlab, what is the question? Where should I go thoroughly, yeah, aggressively? So how the mutual fund is better comparison to as an individual or retail investor rather than investing in a stock to investing through mutual fund.
I enjoy cooking, and I'm going to give you a food analogy. If you want to make biryani, which is a very popular dish all over India, biryani has about 30 ingredients. You have to marinate your vegetable or non-veg or whatever it is. You have to cook your rice, you have to layer your biryani, you have to do all this, you have to fry onions. It takes a lot of time. Sometimes you do it and it doesn't come out right. There's so many biryanis made in India, hard to procure all the ingredients. So you order biryani from outside, correct? Many of us, when we don't want to make it at home, we order. The same thing is true of investment. Equity investing takes time. There are so many factors to think about. There are different companies. Understanding a financial services company is very different from understanding a consumer company. And many of us in life don't have a lot of time. And so that is where mutual funds come in. They are a highly regulated, transparent, and simple way to get exposure to Indian equities without having to track all these companies yourself.
Correct. So even the now the mutual fund history is also a very long history, and they have
Indeed,
generated,
in fact, many people look at multi-baggers in stocks. They don't realize if you look at the NAV of a mutual fund, many of those have created multi-baggers as well.
multi-bagger return for the investors, right? So I think most of the question whatever they've asked we have covered, and the rest of the question are repeatedly. So uh, I think so. No more any question, ma'am, from the investor side for the today's session. So any last remarks for our investors from your side, ma'am?
No, I think my remark is, look, it's a great time to be working, building, and investing in India, and let's make the most of this opportunity. I always say that I'm someone who wears sarees, and people hand down sarees and jewelry for generation. I think mutual fund is also an asset that I hope you invest in, stay with, and hand down over the generations as India grows.
So thank you, ma'am, and thank you all the participants who joined from the various location with us today. And I think it was a wonderful session from the ma'ams. They have clarified all the doubts, and I think now you have built up the confidence level. You got the tips also now where to invest and how to invest, and what types of why you need to invest in India to generate better wealth creation over a period of time. So that is what from our side today. Thank you very much for joining with us, and thank you, ma'am, for giving a wonderful session once again. Thank you,
Thank you.
and have a great evening.
Thank you.
Thank you. Thank you.